Hello, my name is Russell Myers. Welcome to Issues Unite. I'm actually combining two articles that I was in the process of writing but hadn't published yet. So, uh, and I'm going to be flipping between them. All right. So, we've got a number of things going on here. Right now, as of this time, I mentioned the rise of precious metals recently in a recent video. As of yesterday, gold had risen to over $2,000 an ounce and is holding there and slowly rising. Silver has earlier today surpassed $27 an ounce, and for some reason, people think that silver has a limited range in which it can rise, but silver is currently nowhere near its previous peak in 2011 of about $50 an ounce. So we got a ways to go, and as of right now, silver in 1 year has increased in value by 61%. So that's quite a change. Anyway, meanwhile, the dollar has seen its worst month on record in July, declining in value against other currencies. I've mentioned this before and how it relates to the value of precious metals and inflation. As the dollar declines in value, it takes more dollars to purchase metals and other commodities. This concept can and should be applied to all commodities in your own mind, because this is an indication of the coming inflation, which will impact the general economy. Now, there are some people who think that the Federal Reserve is attempting to devalue the dollar in an attempt to increase international trade. And that's a good possibility. But if the idea that it would increase international trade is limited to what commodities we produce domestically. The devaluing the dollar would help U.S. farmers, but, agricultural products are not our strength in international trade. The top four exports from the United States are machinery, electrical machinery, vehicles, and oil and minerals. And, I'll state that some of this is debatable, depends on what source that you listen to. They're all pretty close, but they use different methods of calculation. So, and I'm sure they all have their own bias. Much of our domestic production relies on resources that are purchased from other countries. Raw materials or finished products, such as steel components, and also a lot of chemicals. When the price of those resources from other countries increases, if you devalue the dollar, then it will take more dollars to buy those raw materials or products, etc. So when it costs more to buy them, then it increases the cost of production. So that means the price of goods manufactured domestically and exported to other countries will either remain stable or the price will increase. Devaluation compared to other currencies means the other currency is more valuable. So it takes less of their currency, but because it costs us more to produce it, it causes a problem. So all of this means that, devaluation of the dollar will have either no impact on trade or actually cause a further decrease in the purchase of U.S. durable goods like vehicles and machinery. The domestic impact is that it will cause accelerated inflation. The cost of living in the U.S., already at number 21 globally, will increase. Meanwhile, quality of life will plummet, with the U.S. currently ranked at number 33 for quality of life. And something to note is that virtually every country ranking above the U.S. on quality of life have universal health care and stronger social support systems. Even Greece, Hungary, Poland, and Bulgaria rank higher in quality of life than the U.S. does. So throw into this scenario here that GDP has declined, and with Congress allowing the unemployment subsidy to expire, not reaching a new stimulus deal and never approving any additional pay for essential workers, we're now facing a larger problem. Restaurant industry and small business experts currently predict that at least 30 to 40% of restaurants and small businesses that have suspended operations will not be reopening. And those numbers keep growing. Even businesses that are reopening are making such low profits that they're laying more workers off again or closing their doors for good. Meanwhile, we see more and more corporate bankruptcies being filed and physical locations being closed. Of course, all of these closures mean fewer jobs, which means fewer consumer spending, even less than the second quarter of this year. But none of that means corporate owners will accept lower profit margins, and stockholders are not going to accept lower dividend payments. There have been many cases where stockholders have sued companies for paying out low dividends. It seems like these people are completely oblivious to the role they play in the economic downward spiral. In the pursuit of higher profits, we can expect to start seeing higher prices for consumer products in the near future. And that, combined with the decline of the dollar in international trading, will add up to a coming wave of inflation, which will take many by surprise, because most of them are in denial right now. They want to say it can't happen. Now, and some people are going to say, even right now, that this is not going to happen. But we've already seen it happening with the oil market. And I did at least one video on that. Even as oil supplies were at storage capacity, to the point where pipelines were being used for storage, and over 100 tankers sat offshore. Some of those tankers sat there for weeks. We saw oil and gas prices rise. That's because oil refineries decreased processing to create a false decrease in supply, forcing the price of oil and gas on the consumer market to go back up. Never mind that entire oil fields have been shut in, and many thousands of oil workers have been laid off. We've only seen a slight rebound in oil demand. Overall, demand still remains much lower than any time in decades. And yet, gas prices are back near the same time as they were at this time last year. Yes, at the moment, some consumer goods have declined in price. This is temporary. Some part of increased pricing will be a natural result of lower production, which results in higher cost per unit of some items. Grocery stores may increase prices because of increased waste, because of low sales of perishable items, because people don't have the money to buy groceries. This, in addition to the greed motive and the dollar decline that I mentioned more than once, is going to result in runaway inflation in the near future. I know a lot of people are claiming that we're going to see deflation. We will see some deflation for a short time, but that is not going to last. The fact that precious metals are rising is a sign. The stock market doesn't mean anything. There are basically only 5 or 6 stocks that are propping up the entire stock market. Microsoft, Google, Apple, Amazon, Netflix, and Google. So, what does this mean? That means the rest of the stock market is in decline, and it has been in decline. And it would be in much worse decline if the Federal Reserve wasn't running a non-stop printing machine to buy junk stocks and bonds that are worthless. If the national debt continues to rise, which it will, and the deficit, then before long, we are going to be paying more interest on the debt than we produce in GDP. When our GDP is, our debt to GDP ratio is already over 100%. But when just the national debt to GDP ratio exceeds 100%, that's when we have problems. The U.S., the national credit rating, has already been reduced. So that means that it's being recognized internationally that the chances of us meeting our obligations are seen as being low. That if we owe other countries, chances are we're not going to pay it off. And it looks like, and we're giving all appearances, and have been since Obama was in office, that we have no intention of paying off debts. With the increased military presence in the South China Sea and around Russia, and bombing the entire Middle East pretty much, Anybody that we owe money to, they don't trust we're going to pay it. And chances are we're not going to pay it. But when we can't borrow money anymore, our ability to wage war on other countries and to be a viable militaristic threat is also going to decrease. What happens then? If we start a war with somebody, what happens then? Yep. So, anyway, no, war is not going to, build our economy up. It will not. It's not going to help. This ain't World War II. We're living in completely different times. This is not post-World War II. We are not going to increase trade with other countries because we destroy their ability to manufacture. It's not going to happen. It will not. All right. Please share this video. Talk about these subjects. Be aware of what's coming. All right. Be as prepared as you can. If you can, please donate $1 a month to help expand the channel. And I hope you have a good day.